What is your thought when it comes to a 50 basis point cut in September? Do you believe that is likely? And if so, what is the potential impact on the markets, especially with this big sell-off that we're seeing right now?
Sounds good. Hey, good morning, Frank, and thanks for having me back on your show. So a 50 basis point rate cut, that seems a little outrageous right now. I know markets are pricing in a pretty high percentage of that, but keep in mind, we just had one data point. The market is trying to make a conclusion out of one or two data points. We have so many other strong data points still, including, GDP in the second quarter was 2.8. Third quarter GDP looks like it's around 2.4, 2.5%. The data is still respectable. Yes, it's lower, but think about this. The unemployment rate is still about 4.3%. So we, at this point in time, we don't see a 50 basis point cut in September because we get a lot more data points between now and that meeting. Plus, we get obviously Jackson Hole in August. So again, a lot more information coming between now and then. So 50 seems a little bit outrageous right now. We're still on the page. We've been saying this since I was on your show last time. 3 rate cuts for the rest of this year: 25 September, 25 November, 25 December. 50 seems a little too aggressive right now.
All right, so Gene seems to think that the idea that a lot of people are expecting a 50-point cut, a bit of a knee-jerk. Of course, we're seeing a little bit of weakness in the job market. Gennadiy, I want to come over to you. Your view on the possibility of a 50 basis point cut and also potential impact on the market, keeping in mind in recent days, this market's been moving on earnings report and economic data.
Yeah, it's a great question. I mean, I tended to agree with Gene here. I mean, I think a 50 basis point cut right now is a little bit excessive. What we're seeing right now is the market really reacting to this shift in sentiment. And I think a lot of this is driven not by the economic fundamentals necessarily, but by global market deleveraging. I think there's a lot of carry trades that were wound up over the last couple of years. And what we're seeing now is this very sudden stop to those carry trades, which was why markets are starting to panic. I don't think we necessarily need a 50 just yet. I mean, we'll certainly see how this plays out. I would say the Fed is certainly a little bit nervous at this point. I think Friday's payroll report showed them that job growth is starting to slow, but we're at a 4.3 unemployment rate. I don't think that's historically a need for a 50 basis point cut. We haven't seen a crisis yet, so certainly don't want to rule anything out, but we do expect 25 basis point cuts from here all the way through the end of 2025, with the Fed reaching 3% by then.
All right, so you're expecting a cut, but 25 basis points. I think you both are kind of agree we're getting a cut. I think everybody agrees we're getting a cut. The question is, has the situation turned, quote unquote, so serious that we need a 50 basis point cut? I want to switch gears over to the Mag 7, mega cap tech. That's been powering the markets for most of this year. We've seen a bunch of recent reports that really just kind of spooked investors. Obviously, Amazon is the most recent one. Soft guidance and also talking about the consumer. Gennadiy, I want to come back over to you. Are we overly concerned about the consumer? Because you mentioned the jobs report. Yes, slowing growth when it comes to jobs, but at the same time, wages 3% higher, more than 3% higher year over year, and still about 96% of people are employed.
I agree. I mean, we've seen consumer spending slow down a little bit, but it certainly hasn't actually fallen off a cliff. I think the market is reacting as though we've suddenly hit recessionary territory. That's not really why we're there yet. I think there was a lot of distortions to Friday's number. I certainly think some of the recent data has been a little bit softer, but we're not quite in the territory that the market is expecting a 50 basis point cut for fundamental reasons. I think a lot of this move is being kind of conflated with what happened on Friday. And yet a lot of this is probably more about global market deleveraging rather than the actual economic fundamentals. Certainly the Fed is probably going to go faster, but, I don't think they need to panic just yet.
Gene, coming over to you. Again, apologies. I did throw a lot at you there with the Amazon report and everything else. Gene, I want to get your view on mega cap tech. I'm looking right here. I see NVIDIA reports on August 28th, quite a few trading days in between now and then. How do you see mega cap tech and the Mag 7 moving in between now and then?
Yeah, I think the Mag 7 and the mega tech, all this taken together, it's really what's been affecting the market. I think the markets right now are being hit by this nasty triple whammy. High valuations, PE ratio is pretty high. High expectations. Year to date, as we all know, AI and Mag 7 have been the market leaders. This earnings season that we're in right now, it's a show me the money moment. And this show me the money moment, pretty much underwhelming. And then you have high concentration. So you take all of this together, this says to us another correction is possible. Remember, we had a correction July to October of last year. Corrections are a normal part of investing. We think we have another one coming up. But the good news is that we don't see a bear market. I mean, the data, earnings look pretty good this year. They look better next year. $24 trillion of cash on the sidelines, waiting for better valuations. The Fed will cut, and you need a recession. We just don't see a recession right now. We see a slowing of the economy, but no recession. You need a recession for a bear market.